The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour on this last day of September. This is going to be the one that tells us in the monthly charts where we stand. So the close is very important. Meantime, I've got a 10-minute E-mini chart right up here. Look at this beautiful up channel. From the low yesterday, we discussed this as being the start of a potential very strong bounce. And then went just a tad lower. We held the low. Look at this. Let me just do this for you. This is a 10-minute chart. Look at this beautiful arch formation from the low that was established at 1861 on the E-mini, at 240 on the 29th of September, rallies up to peak ABC, pulls back, but then it goes to a D, and it goes to a D at 1040 at the 29th. Then it plummets down back again, but it makes 1861.50, 50 cents higher as the new higher low bar. And a beautiful left side, right side price time match. And look at the dashed line, that Chapman Wave inside wedge. Start a rally, goes to peak A, peak B, pulls back, and then it starts basically to make a channel, and that channel continues to peak A, B, C, D. Remember in the Chapman Wave, you want to go to the fourth highest peak. That's where you got to be a little bit careful. That's where you can recycle or actually start a very sharp decline, but D is what you really look for. Goes to a D, starts a very quick 1, 2, 3, 4 bars, 4 10-minute bar pullback, then starts a rally. And that rally goes to peak A, B, C, D, bumping up against that pink dashed line channel resistance. I didn't want to make it messy. I could have done this. I didn't need to do that, but I could have done that. That says, that goes green. Oh, just done it, huh? I said I wouldn't do it, I did it. Okay, goes to a peak E and it pulls back sharper and comes back and it starts a brand new move after the close yesterday, and it goes peak A, B, C, D. And now this is going to be very interesting because it looks like this is with no technicals whatsoever. That is no MACD, stochastic, 9-period moving average, none of that stuff, just the Chapman Wave methodology of left side, right side price, time match, cup formations, arch formations. I want to do this right off the bat. Why? Because I know that many of you are day trading. I thought I'd just show, I know that I get a lot of questions about these things. So here we are. So now we've gone to a peak. It goes A, B, and it bumps up against that pink line. And I'm looking and I'm saying, imagine in your mind what the MACD and stochastic is doing. I suspect the stochastic is already pulling back, and the MACD is kind of struggling. It's the pattern that I called, remember from October of 2007, I called it, everyone thought that you had made a high in July, August. I said, no, I know this pattern. Something's wrong with this pattern. We're going to go to at least 2 more higher peaks in the weekly chart, and then you got to be really careful. And that was the pattern that I call the double hump. I always make these little caricatures up, images of the MACD. And what happens is on that second arch formation, that's where it pulls back. So this is where it's quite important. This is a G/C. You have pulled back and you've held the up channel, the dashed line. Just learn how to use these single lines as beautiful support and resistance levels. And now it's going to be very important. Why? Because in the next 20 minutes, if the E-mini start to trade at 8, they're at 1901, up 27 right now. That's a huge move. But we've seen that on and off in the recent weeks. I'm going to show you something else that's really important. But if the E-mini starts, instead of trading at the 1902 area, 1903 area in the next few minutes, 1903 to 1904, if it pulls back and goes underneath and goes to 1898.50, that says, uh-oh, be careful. That's probably a G and it's going to be pulling back. At the moment, you've got a little bit of residual strength. And I'm going to draw this in because this is what I think is possible, that we don't quite get there. We just have a little bit of a rally and then we stall, and that's going to be key. What happens in that stalling motion? If there's a powerful move to the upside, because don't forget, there are literally thousands and thousands of shorts out there. And what happens in a case like this? there is both a short squeeze, plus because we were getting to such intriguing levels of lows in areas like the biotech and other areas that have been so badly hit. This is the time to bounce, and this is the time for fund managers to get into some new positions. So this is going to be very interesting. If I was I'm not at this point, but if I was holding the E-mini, I would just put a very tight stop, and I'd say, you know what, it's at 1903. If it pulls back and takes out 1899, no, if it takes out 1900 again, I'm out. But at this particular point, just keep raising your stop. You can still go to a D. It's not impossible. Now let me show you something else. And this is a beautiful pattern. The reason why I wanted to show this, there's always talk about on the downside, the price can go down so quickly that it takes out bars and bars on the left side. It could be a daily chart that takes out weeks of highs on the way up. As it plummets in 2 bars, it just smashes through. I agree 100%, but that's what we call crash material. I don't care whether you're talking about a 2-minute chart or a daily chart or a month. That's crash material. This is just a beautiful cup formation or a bowl formation because it's taken so much time with the lowercase h pattern right there with a successful test. That's the same as the Dow. Let me see if I can do this. Look, the Dow has made a successful test so far of the doji candle of yesterday. It did go underneath the 15,979 low of September, I believe, the 1st. And now, we are just about October the 1st, and we are trying to have a rally. This rally will succeed in having more legs only if it closes above the left side peak of significance. That's the left side peak of the 25th of 16,465.23 in the Dow. If it does that, you just move along to the next level of resistance. Okay, now let's go back to this chart. So in other words, what I'm saying is, yes, you came down. It looks like you came down in humongous speed. But when you do a left side from there to there, a right side price time match, or even the very big one where you were at 520 on the 28th of September, you were at 1915. And here you are, September the 31st, and the high today so far is 1907. 8 points away after coming all the way down to 1860. I mean, look, to me, it looks like a mirror image, and it's a weaker mirror image so far because it hasn't taken out the 1915s. But at the same time, you've got to admit that without the technicals, now let me grab the technicals. I think it's this one here. I hope it is. Nope, it's not. Let's see if I can get it. Okay, this one here. Look at the technicals. So you remember what I said? I felt that the stochastic probably pulled back. It did, right there. This is a 10-minute chart with all these technicals. There's the MACD, but the MACD hasn't crossed negative yet. So this is what I'm looking at. There's a chance that, yeah, you could make a full impact of the fast-moving average, the green line going up. But in fact, the stochastic's still only at 70%. So we're watching this real closely. As I said, if you're long, you just raise your stops. I'm out. I'm not doing anything right now. Also, I'm doing the show. So I find it a little difficult to do them both at the same time. So let me open this up again. No, I'm going to keep this. We're done with the 10-minute chart. I've discussed it. I've given you the parameters. Okay, out of the way. Now let's go to the E-mini daily chart. The daily chart is 1912.50. As this is E-mini, so I'm using 25 cents, as 9-period exponential moving average resistance. The doji candle, which very often becomes either a halfway marker or a reversal point, this is going to be key. Let me do this. I'm going to run the numbers. The Dow is up 218 at 16,267. S&P is up 28 at 1912. Comp index is up 81 at 45.98. Gold is down 13 at 113. Silver's down 5 cents at 14.5. Platinum's down. High-grade copper is having a really good bounce at 2.34. I just want to look at this. High-grade copper. Big bounce, very big bounce. So it's still in the trading range, and we've been talking about this trading range for I don't know how long, and that's going to be very important. Let me move this down. See, that very long-term support level, look at that. Oh man, I tell you couldn't get closer in a monthly chart to the support that has to hold. If it breaks under 2.28 or 2. No, this is be exact. Yeah, if it breaks under 2.18, at any time in the next 2-3 weeks. High-grade copper has broken key support. Now let's go on, and we're going to go to the bonds. Bonds are down 17.30 seconds at 157 and 12.30 seconds. Look at the TLT. Remember I said the MACD is at 84%. No, the MACD is strong. The stochastic's at 84%, way over the 80% that I like to see. The 9-period moving average is at 122.53. It's trading at 123.47, down 50 cents. But there's a good chance that it's a peak D. If it's a peak D, then we have to look at, it just disappeared on me. We have to look at the, let me go there, 120-minute chart, of course. 120-minute chart, which I never finished notating. Oh, that is upsetting. How silly can you be, Mr. Chapman? Okay. Right, A, B, C. I believe that's exactly the same price. C is 123.68, 123.77. So that is a D. And we've gone to an E and we're pulling back. MACD is still good, but is turning down a little bit. Stochastic's at 89%, but still strong. Oh, man, I tell you, this is going to be very interesting. Okay, now what we've got is just a few moments here. I'll talk about the dollar. I don't think we have a few moments, and then we're going to go to a break. I wanted to get that all done right now. See, the dollar's showing some nice strength here. It's gone to a C, peak C, and it should go to a D. And the 120-minute chart has made a D and pulled back sharply. This is A, and this is leg B. It looks to me like the dollar really does want to go to a breakout, a leg D. That would be above 96.70. And that's going to be really important. Why? Because once we start to get there, the weekly begins an improvement in the MACD. MACD is not great. Stochastic's not great. So it's the price that tells us. And the downtrend line comes in at about 97.50. Now, you want to the IEF. I do the IEF quickly. IEF, yep, this is a leg, just like, look, work its way. I'd said right here, it should work its way to the 109s. I'm not sure just when, but at this point, the IEF, which is the iShares 7 to 10 year Treasury bond ETF, looks like it's got a D in place, and at 107.76, down 9 cents. If it breaks below, closes below 107.26, you've got 107, then 106.80 as key support levels. If it breaks if it goes under 106.50 later this, today's Wednesday, later this week into early next week, then we're going to really take time to get to leg D. If in fact, for some reason, the IEF trading at 107.76, down only 9 cents, breaks into the 108.30s by Tuesday, this coming Tuesday, you'll be looking at a leg D up in the weekly chart above 108.76. Basil Chapman, Tiger Technicians Hour. Great to have you here. I'd love to have your calls. Now I can take them, and we want to look at a couple of stocks. Look at CVX.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I've just quickly done, haven't done it in ages, I had to redo it. There it is. The IWC. And the IWC is the microcap ETF, iShares. There was a period where it was actually outpacing many of the others. One of the things I wanted to quickly, because I knew I'd seen this chart before, in this case, it's only a single leg up. But here's that leg. It goes to a peak E in the weekly chart. It goes to 8169, IWC. Pulls back. MACD dips negative. Stochastic gives you failure patterns all the way. And then out of the blue, you get this. Usually it's a right arm extension. And in fact, the MACD doesn't go quite as high as it was at peak E. Stochastic does. One of the technicals goes higher, and that's a heads up to say that there could be a failure pattern. And then it goes to that single leg A up and pulls back, and that's kind of excuse me. That's the pattern that we were talking about just a moment ago in that 10-minute E-mini. That there's that one. It's like a failure pattern. And yet there's just enough energy to go higher. Now, one of the things I wanted to talk about today is look at CVX. I was looking through some of these big integrated oils. And I wanted to bring it up, although it's not technical Friday, because this is the sort of thing that I would discuss in the Chapman Wave methodology on Fridays. That's where I get into the nitty-gritties. I get questions about them just purely on a technical basis. What I had shown subscribers way back, way back meaning early summer, I think it was. Yeah, summer. And I just gotten the signal to say that there was a good chance that, no, it must have been earlier. Yeah, it must have been earlier, because I notated very carefully and specifically what I thought in my interpretation of Elliott wave. Now, I'm beginning to understand that just like I use Richard Arm's Trin Index completely differently when I heard his webinar the other day that one of our TFNN listeners had sent me saying, hey, it might be interesting to go back just to see what he's saying. I was surprised because basically Richard Arms is saying that when the Trin Index goes to a very high level, that is very bearish. And when it goes to a very low level, that could be very bullish. Of course, I have a completely different reading, and that reading just came about through the statistics, through the facts. I didn't look for it, I didn't find it, but I do these things so often that at a certain point I say, hey, wait, there's a certain consistency. So the consistency for me now with the Elliott wave, just this is the bigger trend. You know, there's the rule of alternation. When you've gone very strong in a specific direction, you could then take time to do something else differently, and that's when you get your flats. That's where people get so confused, in most people, in Elliott wave, but that's where I use my arch formation that goes to a lowercase d, which a lowercase m, which, excuse me, I'm jumping ahead, which goes to a lowercase h, which can go to a lowercase m and keep going, right? So yes, CVX. And what I'd drawn in was 1, 2, 3, 4, and then I'd said, this could be a 5 coming up. And the 5 went down to 69.58. Now, what's really interesting about that, now, I might have done it a little earlier. Maybe I've dropped the 5 because it's extended down. But basically, what I'm looking at here is an Elliott wave. You get your 1, then you get your 2, then you get your 3, then you get your 4. 4 in this case is a flat. And then you get your very strong leg 5 down. And that's where you can start, excuse me, to get a turn in that particular tradable. And in this case, what I'd said was, I suspect from the monthly chart that Exxon will have a really nice bounce of time, but probably not price. Why? Because it seemed to me it was appropriate that we had that flat that was going on from December of 2012 into the high of May of 2015 before the consistent breakdown of every single week, a red bar just about, for weeks and weeks and weeks. And that says to me, patterns repeat, and there's a real good chance that the pattern for Exxon, for Chevron, I meant to say, I keep saying Exxon, it's Chevron, is at 78 right now, making that little H that goes to an M pattern. I can even draw it for you. But even better is that I think we've outlined basically a rectangle formation. I'm even going to raise it up a little bit because I think if you can break the 9-period moving average to 80.62, but it's only in a trading range. Fabulous percentage from 70 to 80 something, but nothing when you think of the 130 that it was at. Just wanted to go through that. We'll be back. Basil Chapman, Dow's up 220, S&P's up 28. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just do a couple of things. Let me just add here space to the right. I had a question about something. Let me just go back and read it. Okay. So if Exxon is going to rally further from here, it's in leg C in the 120-minute chart. It's got a cup formation with the left side, right side price time match potential going to, let me see if I can do the Chapman Wave inside wedge right here, and then you'll have something that you can look back on. Maybe tomorrow sometime we can look at it. That's the more conservative, no, that's the speeded up one. More conservative would be, I'll give it to you in a second, space to the right. Let's make it a little bit more, 22. There we go. Space to the right technically says that we should go to, no, that's right. That's good. Right there. To the 5th of October. And this is the inside wedge resistance right here. And you've got the next level of resistance would be on Chevron. I keep saying Exxon because I don't look at Chevron that much. 79.83, and it's trading at 78.77. So it'll have to keep this up. It's going to be tough to do, but we'll see what happens. And that's just, look, that's a projection that you look out for. But you know what I always do? I invariably say 2 fighting techniques. One is the arch formation. One is the cup formation. The arch formation says that if there's a failure in time, here's the 200-period moving average at 78.19. If, in fact, Chevron starts to slide and goes underneath 78, you just have to close one bar below 78. You've used up time. You're going to have a spectacular move to suddenly scream towards that 80 level. And not only that, in this particular instance, while I've got a left side, right side price time match, I would automatically draw in the resistance line. And that resistance line says not until Chevron pierces, it's the same thing, 80.20. Will it even be possible to think of that as a right side, left side, right side price time match? That's not to say it can't do it, but it's saying if you were long, you'd have to put in a trading stop. To get a brand new signal, you'd love just a quick dip to 78.50, somewhere around there. You take a little bit, because now you can't take more than a little bit. Take a little bit, and it has to quickly move into the 79.10s. And then you just put your stop almost just a tad under your entry point, because we're waiting for leg D, and D's where things can happen. Okay? So that, I don't want to do that. The other thing is, I talk about cup formations, but you have to have a very, how can I call it? You have to have a very musical eye. And that eye has to say, wait a minute, there are arch formations, and there are a lot of them. This could be a big one, but in fact, let's just deal with it in a very, let's do that. And this is saying, at this particular point, there's a fight between the cup formation and the arch formation, as well as that trend line resistance I just spoke about. But the pattern says the MACD is good and stochastics are lousy, but at least trying to turn up, on balance volumes improving, relative strength is improving. So that says, yeah, a lot of resistance, but you know exactly what to look for. I'm still looking for nothing more than a rectangle formation. I'll draw it in here. I'm going to draw it into this candle, to the doji candle right there. And I'm not going to go to the lows, because if it breaks the lows, it's all over. It'll be testing much lower, so I'm just going to make the low, that candle right there on the 10th at 74.31. Okay, we had a little lesson. Wasn't going to do that. Now, as far as the left, enjoyed your discussion. Hi, Basil. Enjoyed your discussion of the ES 10-minute chart and double hump. Thank you, very helpful. Could you please discuss again how you arrive at the price time match target? I never know where to choose the midpoint and which price to match on the left side, and I've been noticing how spot on that technique is for targets. I haven't seen others use this as much. I know you've discussed many times, but I would like to make more detailed notes on this. Thanks, Basil. Chris. Well, Chris, there are a couple of things. It would take time, and there are different ways of doing this. The perfect way, where you actually get the exact low bar or high bar in the arch of the cup formation to be the symmetry, the absolute. If you know, our kids take they put some paint on one side of the paper, fold it in half, then press it, and you get the exact same image. That's what you're really looking for, mirror images. And when it happens, it is just so fantastic, because it just makes it so easy. You've hit your price target. Now you can take profits, or you can take most of your profit and say, all right, you keep going up. Remember what I just drew in this particular pattern here? I drew the arch formation, and the arch formation will say it's 100% correct if the E-minis start to trade, they're at 1899.75 right now. If they start to trade into the, what did I say, 1898.50 or lower area, then you'll say, okay, you got that arch formation. So all the work has been done. That's why it would be greedy to be, actually it's greedy after there to take, other than a quick trade. That's really your target, the D at that point where you've hit the resistance on the E-mini 10-minute chart. Hey, enough of this. I want to go to some other things. I want to talk about this technique that I developed years ago. I don't even remember when I did it. 7 years, 8 years, I don't know. It's called the Chapman wave projections. And I've always looked at John Logan with his particular technical tools, and I thought, gee, you know, I did that ages ago. I did it in a different way. No, I didn't come to the same conclusions, but I came to the same projection concept. And what it did was it took certain indicators and mixed them up, and then it produced levels of support and resistance. Look at the SPY. Look at the SPY. 120-minute chart. It gave all those support levels, then they broke down. Then the next, then the next. Yesterday, I think was I on air? I think I was on air, and I said the 186.97 to the 186.39 area is the support in the SPY. And lo and behold, the low was 186.93 and then 186.99. I would say that that's pretty darn good, 186.93, because it's saying right there, 186.97 to 186.39. Now you've got a very strong rally. I haven't got any resistance points. Should I do that? Should I do that? Okay, I will. So let me just copy the window, paste the window, and let's just have a little fun here. After all, what else can we do? We're waiting for this retracement to be over so we can go back to adding shorts. Let's call this a 10-minute chart. All right, all of a sudden you got yourself the support at 186.91. What did we say it was? 186.93. I'd say that's pretty darn good. And it smashed through the 188's resistance. And now you've got 190.51 as the support. We're at 190.65. So very interesting, right? Look at the QQQ series. QQQ series has 101.10 as support. It went to 98.94. It broke that. It actually went to 98.75. It went 20 cents lower. Now, let me show you. That's the 10-minute chart. Look what happened here. 186.39 was the support. Oh, that's the QQQ. I want to do 1, 2, 3. QQQ. QQQ had support at 98.45 and 98.20. Yesterday's low was 98.75 and 98.77. So nice, two levels. And now there's nothing on the upside. So let's grab the 10-minute chart of the QQQ. And it says, still hasn't got anything on the upside, but it does have 101.10s as key. This is very near-term support. Stochastics at 90%. MACD's good. I suspect that it could even dip down a little bit and then go back up. So when you use bar charts over the candles, over the candle formations. Question, that's a real good question. And as far as the Chapman wave methodology is concerned, looking for the higher peaks and lower troughs, I only need the bars. I obviously, when I do this and I use only the bars, I tend to want to make the bars thicker so I can see it. So the candles are to give me other information. And the other information is about the dojis, you just might not see it. It's there in the regular bars, but it's really a little difficult to see. So I always say when you're using the Chapman wave, you need nothing but you need nothing but the peaks and the troughs, because the Chapman wave is the waveform that never sleeps. Every single nuance is categorized somewhere. And it's in my book CD, not all of them, but almost all of them in the CD introducing the Chapman wave methodology. But as far as the notation that you see here, I want to see the candles. I want to see the little dojis. And now that comes to the question that Chris had on what do I do very often for the left side, right side price time match. And I use all sorts of things, and candles could become, you know what, I'm thinking, that's not a bad idea. I've had this question so many times over the last few weeks. I'm wondering whether or not this is something that someone would be interested if I put together a webinar, or maybe even an intraday, a whole day of these techniques. I'll think about it. It's a busy period, so I'm not sure about time. But let me think about that. And if anyone is interested, just send me an email. I don't know when I can do it, but I'll see if I can get to it. So you remember that peak G/C, and I said it has all the characteristics of that camel hump. That's what Chris was talking about. Look what's happened. Not only have you broken, and you remember what I said, get out of your profits or just use a trading stop. I didn't talk about the short side. I was so busy I forgot about that. But what would have happened is if we tested this and we went underneath 1899, the bar that takes it out is also the bar that has to go right back in the H pattern. So that says that 1898.50, if I was trading this, I would have grabbed that as a potential short, but that would have to be a real quick short because there's still a little bit of energy left to the upside. I think almost all of it is being used up until we take more time to go sideways to consolidate. So the big thing is, how will the E-minis handle 1893.75? Okay, so I got out of that, and we're done with most of that. Now let's do some other things. So that's CVX, okay? CVX. I wanted to also, I haven't even looked at CVS for a while because that had done fantastically, and then out of the blue, peak E with the Chapman wave 2-bar reversal, 113, is that it? Yep, 113.65 to 113.58 Chapman wave 2-bar reversal, August of 2015. That candle is the Chapman wave Roman candle. If CVS, this is CVS Health Core, it was also CVS who did they take over? Whatever company they took over. If it trades for about 3 days out of 5 in a weekly chart, that's going to impact the monthly. And any close on a weekly basis below 92. No, I messed it up. I moved it. I must have moved it. Below 92. Any closes at 101.03. It says, watch out. One of the in the sectors that have been absolutely the best in 2013, 14, 12, 13, 14 into 15. Here's one of those. CVS, the health, pharmaceutical, etc. If this closes today under the 9 EMA, which it obviously will because the 9 EMA is at 99.84, I see nothing to get it 4 points higher. If it closes underneath, that's going to impact backwards. Now, the weekly chart, because it says that this was also Chapman Wave Roman candle has different indications if it's green to if it's red. The monthly one was red. The weekly one is green, and that says it has to go. It's the same thing. It has to close below 92. But what's really important about the weekly chart is it's suggesting that this isn't just going to be if CVS trading at 96 cannot get above 102.50. Even 102, let's call it 102.50 for safety's sake, above the 9 EMA, which is at 101.03 in the weekly chart, in the next 2 weeks. That's just suggesting that the technicals that have been breaking down since that peak G/C way back in March of this year, it's suggesting that the technicals are failing and that the upside is extremely limited. And here again, you've got another sector. For my subscribers, I've just been naming the sectors one by one that I believe are becoming highly vulnerable. Now, I got just enough time yet to do something that I wanted to look at. The IBB, it's a year now I've been talking about the IBB. Well, the IBB traded up today all the way to 305. And 305, if I can grab a 120-minute chart, 305 is the 200, let me just get the price here. So this is the one, and this is the 200 period. Am I right? No. Let me just do this again. No. 14 period. 14 period exponential moving average was at about 290. I think it was at about 298. And it went above it and couldn't hold it. Now it's even working hard to hold the 9 EMA. Now, I want you to take some time today. Is this the time to do it? Should I do it in the next section? I'm going to do it right now until the break. In a bear market, remember how in a bull market, every single pullback of everything that was positive, every stock that was positive, would within days, if not 1 to 3 days, would start to go to a higher high. And actually, it was very often an all-time high. Even the weekly charts, look at the IBB. Look at this weekly chart. Look at that. It barely took time. 136. So this is 1, 2, 3. Boom, it's up. 1, 2, 3. Boom, it's up. 1, 2, 3 up. It takes no time. This is a weekly chart. Look at the CVS chart. Weekly chart, CVS. Look at this. It barely takes time. As soon as it starts to take time, something else is going on. This is what you have to change your thinking. The tide has changed to low tide. We're going to low tide. Don't expect weeks of upside moves now. I just don't think you can get it. I think 5 to 10 days max, a best case example. And then lower lows and lower highs. We've got Ben in Tallahassee. Ben, I'll be right back with you. If you can hold on, please hold on.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, we've got shows going on all day, and just fabulous shows. Just take the opportunity to get to listen to them or listen to all of us. I think you can learn from everyone. Couple of questions I had in the break. One was, if I can find it, Stephen asks about the long-term patterns. I'm going to go right now to Ben, and because we will talk about that. Ben, how are you?
Very good, Basil. How are you?
I'm well, thank you.
Great. I know we have a little bit of time here. So what's been making actually me a lot of money lately is really just two things. When you get these great upticks, these huge upticks like this morning on extremely light volume and bumping right up against the 90 MA, just like the DIA.
Absolutely.
Everybody's talking about, several days or even a week or two of a bounce. I'm like, man, this looks like possibly a perfect short right now. Am I missing something?
I think you are absolutely correct in using the technique as much as you can, as often as you can, until it doesn't work, and it's not going to work at some point. So there are a couple of things that I would recommend with in this particular instance. The diamonds that you're talking about went right to the moving average of 161. I think it was just above 80. I think it's 162.10 or something like that. And then it pulled back. The high today is 162.75, and now it's at 161.77. So this is what I'm in agreement with you that I'm looking at these H patterns, and they're getting shorter and shorter, and it's becoming more and more difficult for rallies to hold. So I'm going to suggest two things, because I don't want to run out of time. I would say to you, I would not take a loss on the position that you just took, because if you are correct, the 120-minute chart says it should quickly slip, and 161 is absolutely important support. But you've got to remember, this is a really critical day. It has nothing to do with chart patterns or anything. It has to do with fund managers who are getting out of old positions that they just don't want to have on the books, and they're trying to implement what they think are bargain prices. But my suspicion, and it's just a suspicion, I have no idea I'd even be able to prove it, is that they are getting out of more positions than they are buying. This is just my guess. Yes,
well, and I think that's where the volume really resonates, because if you look at it, I mean, it's just like we're halfway through the day, and it's just a little blip compared to, right?
You know what? That brings me to another thing. I could talk about up volume and down volume, but I learned quite a while ago that in the technique that I use volume only specifically. As you might recall, look at the Dow Diamonds on the 24th of August. They had that massive volume of over 35 million shares. And right. I'd say that looks to me like in the SPY, if you remember, I spoke about it, and I said the SPY, it means that we can chop around higher without really having a major rally for about 28 sessions. I haven't got time now to count them. Right. But I wouldn't be surprised if we do something like that. That's number one. Number two, and I think this is really important, is that the volatility index, VIX, wrong letter, VIX.X, is still at 25.44. They are still getting their, they are buying insurance, and that's all I can say. So we've got these two factors, and the TLT, third factor, is holding at 123.60. It's only down 38 cents because the day is young. It could be much lower by the end of the day. I think you're 100% correct in using this technique, but as I say, at some point, you might be right, but it could still go a little higher before it pulls back. So just use that. Keep doing what you're doing. And the other thing that I think is absolutely important right at this particular stage is that when the trend changes, and look, I showed during the break, I showed the people in the den, I said, look at the gold chart, look at the gold. Once the tide had changed, rallies failed very quickly, or they were just minor sideways movements before going to lower lows. So you've got to understand the trend. Marty Swag used to say the trend is your friend. And I think that we've got to keep that in mind. Hey, congratulations, Ben. Keep doing what you're doing. I think that's a great way to do it.
Great.
Thanks for calling.
Thanks,
folks, stay tuned. You've got a Dow, you've got programming all the way through. I'll be back tomorrow. Have a wonderful day. Dow's up 107.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.